Hi, you're watching Dukascopy TV and we're bringing you the latest Dukascopy Bank Sentiment Index for the month of June. Today we have the pleasure of talking to Dr. Mark Melatos from University of Sydney to give us his comments on the results of the monthly survey. One of the major findings is the mood indicator. Professors lost their trust in the region's economy in the short run, as the sentiment index slipped 0.06 to 0.52, the level last seen in February. However, they were particularly upbeat about the long-term prospects, with Europe enjoying the biggest gain of confidence, with the corresponding index surging 0.12 points to the highest level this year. In addition, other data reinforcing the current negative sentiment in Europe is the European Commission's Economic Sentiment Index that fell to 102 from 102.6 in May. The drop followed 13 consecutive months of boosting sentiment among the Eurozone, culminating in a 34-month high in May. Professor Melatos, what in your mind are the key future drivers that are likely to improve the long-term economic prospects for Europe?
So in terms of the long-term determinants of economic prospects, especially in Europe, I think as Paul Krugman has said before, the main determinant of long-term economic performance is productivity, labour productivity. And in Europe, continental Europe, but also in the UK and also in the US, incidentally, productivity has been declining. So this is output per hour worked. And so how policymakers respond to that decline will have an important impact. For example, in the UK, productivity per worker at present is something like 20% below what it was at the time of the financial crisis. So this is a big issue that we're talking about. Another determinant long term actually has to do with a more an issue of kind of greater relevance right now, which is the potential for deflation and how policymakers respond to that. So and we know that the European Central Bank is aware of this, and of course they're responding in various ways, including with the negative interest rates and potential quantitative easing and so on. But if the deflation genie was allowed to get out of the bottle and not be controlled, this could have negative consequences for long-term performance.
Moving on forward to the business cycle, as confidence in Asia-Pacific economy continues to increase, the distance to the business peak is constantly shortening. In June, the number of experts who see the region's economy reaching the highest point in 3-year time increased to 6, up from 3 last month. Professor, do you believe the Asian-Pacific region can sustain the momentum of growth, or do you think Asia-Pacific is likely to slip into a slowdown?
Okay, well here a lot depends on, well, everything really depends on China and what happens in China. Growth is definitely slowing in China, but it's still something like 7.5% at present, and hopefully this will continue into the future. But China has a number of problems, potential problems that it's facing, including with the financial sector and potentially large amounts of non-performing loans in that sector. And unfortunately, a byproduct of the resources sector boom, the resources boom, has been that businesses in China have been borrowing funds using imported iron ore and coal and so on as collateral. And they've been using these funds, borrowing not in the kind of main banking market, but in the shadow banking market, and then using these funds to invest in high-yielding assets like property and so on. And we know that, for example, in China at the moment, the property market is doing quite badly. Yes, it's unlikely that the growth prospects, it's unlikely there'll be a slowdown the way we think of it in the West, perhaps. In China, even a growth rate of 3 or 4% in China will feel like a recession. Because that kind of growth, at least, is required to mop up the extra resources that are moving into the cities.
And before we finish, if we look at Europe, North America, and Asia-Pacific in the long term, and how the sentiment has been changing, do you view any area to have a greater influence on the global prospect than the others?
Well, again, much like the answer to my previous question, I think Asia-Pacific will probably be more important, if only because of the impact of China. I mean, China, if it isn't already, very soon will be the largest economy in the world. Of course, the US will continue to be important while ever the US dollar remains a reserve currency, which it looks like it will for the foreseeable future. So there's no doubt the US, whatever the US does, and in particular whatever the Federal Reserve does in the US, will have an impact. Europe, I think, will be less important only in the sense that Europe, especially continental Europe, has its own internal problems to deal with. And so if anything, actually, any impact Europe has might be in terms of crises that arise because of the well-known debt problems of especially southern region countries.
And that is all for today. Dr. Melatos, thank you very much for talking to us. Now, more findings and results of the survey can be viewed online by going to Dukascopy.com and selecting Sentiment Index under the Market Research section. See you next time. Goodbye.